Hello everyone, welcome to the ichimokucharts.com daily analysis for the Aussie dollar US dollar FX for Tuesday, October 8th, 2013. Well, a continuation of the trend to the upside today, a candle that's made a high and a high low. The candle we're analysing is this second last candle on the chart, and it's a doji type candle where we've had the open and the close down around the lows of the trading day. The doji denotes neither side making net bullish nor bearish progress on the day between the open and the close, and suggests that neither the buyers nor the sellers have any decent upside nor downside momentum in the short-term time frame in terms of short-term dynamics in net terms, and suggests that the market is rather indecisive in those terms. The large shadow on the top of this candle is quite significant. We've seen the market test above this area around the 94.50 level, and in the recent past that has been an area of resistance for this market. And for the past 3 consecutive trading days now, we've seen the market test to or just beyond that level and be rejected from there, and today we've seen that. And as this current candle that's forming is moving forward, we're seeing price rejection from there as well. So that area there at 94.50 will be a very important area for this market. Now, looking at this current candle that has finished trading as well, we've seen the market close down towards the low of the candle, and it suggests that the sellers, even though the trend is up, the sellers have taken control. And for the previous 2 trading days, the buyers actually had control of the market, and here we see that change in sentiment, and that is suggesting that there is a very real possibility of this trend changing. Now, if we do see this trend change, however, we do have solid support at 93.86, and it's a previous level that has been important as resistance and now support in the short-term time frame in the recent past. But we also have the Tenkan-sen trading around there, and that strengthens the support around that area. Now, if the market does trade down through that level, the area around 93.50 has been a previous area of resistance and then support for this market, so that will be an area that we do need to watch if the trend does come off. Down below there, this very solid window that was opened up and has acted as strong support for this market, and if that comes into play, we could see buyers return strongly back into this market. But the market isn't trading anywhere down near there. The first barrier that the market will need to address if the trend does change is around this 93.86 level. Now, in terms of the Fibonacci extension, and here today we've seen the market test through the 61.8% level. We've tested to the 78.6% level and been rejected from there in a fairly bearish manner, even though the trend is still up. And for the 3rd consecutive trading day, the market has tested beyond the important 61.8% level and failed to close above there, and that suggests a very real possibility of a change of trend. But as I've already mentioned, we do require confirmation, so we are looking for a lower high and a lower low. Also, with the Fibonacci retracement, and here we've seen the market test above the 61.8% level, testing just beyond the 78.6 and failing to close beyond there, and suggesting a very real possibility of a change of trend to the downside. Now, in terms of Ichimoku, still bullish market in all 3 time frames, and here we have the market trading up above the cloud. We are trading a fair way above the cloud. The cloud has actually been moving down to lower levels over the past week or so, and now flattening out. So equilibrium suggested by the cloud in that long-term time frame is a fair way away from the market at the moment, and wouldn't surprise to see the market retrace back towards that equilibrium, because we know markets move from equilibrium trading around the cloud to disequilibrium, away from the cloud and back towards the cloud, and this market is looking a little bit overextended. So in line with the short-term dynamics, we could see a move back down to lower levels. In terms of the Kijun-sen, the market is trading above the Kijun-sen, so bullish in the medium-term time frame. That Kijun-sen is pointing up fairly sharply and reflecting some solid upside momentum. So this suggests that we may not see the market trade back substantially, and supports the idea that we could see the market find buyers coming in around the 93.86 level. In terms of the Tenkan-sen, we have the market trading up above the Tenkan-sen, the green line here, so that's supporting bullish activity in the short-term time frame, and is an area that the market may find very solid support, coinciding with that 93.86 level. Looking to the Chico span, that's above the corresponding price action, so it's confirming that there is solid momentum in this market in the longer term time frame, and supporting the bullishness that we're seeing in the long term, medium term and fast term time frames, and suggesting that there's a possibility that if this market does come off, it will find support and then bounce back up to higher levels. So really moving forward, we have the short term dynamics favouring the sellers, even though the trend is up. We're looking to the area around 93.86 to act as support, and then an area around the 93.50 level may act as support as well. But down below there we have solid support at the window that's been opened up. Some resistance close to where the market's been trading, very strong rejection from there in the recent past at 94.50. If we see solid bullish activity up above there, we could see the market trading up to 95.36, but these levels of support and resistance that are close by are crucial to this market over the next trading day.